Let me try that again. Good morning, traders. Good morning, good afternoon, good evening to you, depending, of course, on wherever you're joining us from in the world. I am your host, Christopher Guzman, and I will be flying solo this morning. Unfortunately, our co-host, Richard Hooper, will not be with us this morning as he is tied up, but hopefully we'll still have just as much fun and capture just as many pips. There's a lot to talk about in the market this morning, a lot of really nice opportunities setting up from the look of it, and so happy Wednesday, everybody. I'm very much looking forward to getting into it. Today, of course, is Wednesday, the 17th of February 2021. Without further ado, let's go ahead and get into it. All right. So I want to first start off the show this morning by giving a recap of what happened yesterday, what I was looking at yesterday. I am looking at this morning the dollar pulling back. We had a really nice rally on the dollar yesterday. And so I'm looking at that pullback now, and we're starting to see that translate across the board throughout our dollar pairs, right? So in the case of pound dollar, I'm looking at the 2-hour time frame right here, and what I'm looking at, right, is the market had come back to the trend line. We broke the trend line, yes, but if you look at all the price rejection that's here, you know, that's a sign that this trend line is holding as good, solid support, okay? And so, you know, I don't want to mess with support, right? I don't want to mess with support or resistance and trade against it. I want to look to trade in the direction, right? Now, the overall trend here is up as well. And if we look at our our sub-AB boundary here, we can see that there's an anticipated 1.618, sub 1.618 at 139.94. And then there's another anticipated 1.618, this one being the capital, at 143.50. Okay, both of these being, of course, on the 2-hour time frame. Now that capital fib, if you look, the capital fib, what I'm looking at here is we've had a retracement back to the 50%, right? So we've had a maximum of 50% Fibonacci retracement. That's down to 126.75. Look at how the market has rallied ever since and given us this really, really nice uptrend ever since. Okay, and along the way, of course, it's given us these subs as well. Now, obviously, you know, I delete all of the old subs in here to keep this nice and clean, only leaving the most recent sub fib here in place. Okay, but the point is, you know, both are pointing up, and you know, as we had this sell-off back to the trend line, we did manage to penetrate the trend line ever so slightly. But again, with all that price rejection there, that's a good sign that the bulls are likely to come back into play here and really start to push this up again, reacting off of support. Now, this was my trade from yesterday, this one here, and you can see we made it almost to the target, didn't quite make it to the target there, and then pulled back, and at the close there, I am out of this trade. I'm not in this anymore, okay? But this, you know, it was still a nice trade. It did pull a profit there for us yesterday. Euro US dollar, okay, here's the trade from yesterday on Euro US dollar. You can see that hit the target really nicely. It's actually just hit the target this morning. Beautiful trade there. What I'm looking at in this case is really the market in an uptrend and chasing after ultimately a 2.618, an uptrend 2.618 in this case, but sub fibs that are pointing down. Okay, and obviously with the fact that we have a 2.618 here, you know, there's a good chance that the market ultimately makes its way back into the capital AB boundary, chasing after its 38.2. At a minimum, now that we've broken this trend line in here, okay, this should now, in theory, right, this should now act as resistance. right? What was support now becomes resistance, okay? And so I'm looking at this here as resistance. Now on the 2-hour time frame Euro US dollar, you can see stochastic RSI is completely oversold as well, just like with what we saw on pound dollar, right? Stochastic RSI completely oversold, okay, completely, and U-turning, which is a very good sign. Now both of these, obviously we can see both of these, there's decent opportunity here, but what I'm going to want to do is I'm going to want to maybe go down to the 15-minute time frame and see if there's a way I can get in on this earlier, right? Now that's not to say that I'm going to do that, right? It's not to say I'm gonna get in earlier. I'm just gonna look and see if there's anything present, you know, that would allow me to get in sooner, right? In a responsible way. And so I'm gonna go ahead and drop down to the 15-minute time frame. And what I see, okay, of course, is the fact, you know, once we get down to that trend line, you can see how it rides along support. We actually got a candlestick formation the last time and a rally, and then a retest and a candlestick formation, right? That's the tweezer bottoms right there. And now we're seeing the rally. Now, the fact that we're coming up to this counter trend line here means, you know, I'm gonna want to wait for the 2-hour, okay? You know, had that counter trend line not been there, had we maybe broken that and come back and retested already and seen some price rejection there, yeah, that's a different story. But the fact that we're still below, you know, I don't want to get in here yet, right? There's no real upside for me to get in early here. Plus, you know, keep in mind there's plenty of room if this does pop bullish. There's plenty of room up to that sub 1.618 and then up to the capital 1.618 beyond that. And don't forget, you know, I'm bullish on pound dollar anyway, all the way up to 144.70, which on the daily time frame you can see is an unfulfilled 38.2%. Now, on the daily time frame, interestingly, okay, I feel like we kind of have a need here, or the market kind of has a want to push down and retest that trend line, right? Just like it's done, you know, repeatedly. You know, you can kind of see as the market gets further away from this trend line, it likes to pull back and come and retest. The stochastic RSI is completely overbought in this case as well, but that could, you know, I'm not looking for the opportunity on the daily time frame. I'm looking for it on the 2-hour time frame. And on the 2-hour time frame, we can see we're perfectly aligned there. So I do want to wait for this to set up, again, because of how we're approaching resistance here. I don't want to just jump in on a buy and then, you know, get in right at resistance and regret it, right? So anyway, moving on. Euro US dollar, okay, again, this was the opportunity from yesterday. Worked out beautifully. We're now pulling back. I anticipate a pullback back to resistance there. I do want to turn down to the 15-minute time frame here and see what that looks like, if there's anything of interest there. No, not particularly. Not particularly. So I'm going to go back to the 2-hour. I'm waiting on the 2-hour. Now, ultimately, you know, given the fact that we've broken this inner trend line, as I teach you inside of the Ultimate Forex Trading course, and as I say over and over and over again, right, for any of you who've watched me for a little while now, you know this is like a key principle, right? Anytime the market breaks one trend line, it likes to make its way toward the next available trend line, okay? And so, of course, with that being said, that means that, you know, I should be looking at this as potentially moving now toward the next available trend line. And that would make sense because we do have an unfulfilled 38.2% to the downside as well. So it would be in line with the capitals, you know, making their way back in for that deeper retracement, which we know that fibs like to do. And so, you know, I am interested in selling this. A new opportunity has emerged here in terms of a sell, and that's obviously the result of this large engulfing bear that occurred as soon as the market hit this maximum 69.4% level. But obviously, being that the market is already well past that now, we're about 25 pips past that point. It's too late, right? Train's left the station. So what I need to do is I need to wait for the next train to come in. And what I suspect will happen there is that we'll get the pullback, retest that broken trend line, and then that'll give me the selling opportunity. And then I have room down to 1928 to take this, which is 10 pips in front of that anticipated sub 144. Okay, moving on to dollar yen next. Dollar yen, you can see there's the opportunity taken from yesterday. Worked out beautifully. Now we're pulling back, of course. Now there is a counter trend line break here, and this is interesting because if we're trying to gauge how big the pullback on dollar is this morning, we have to look at the fact that we have a candlestick formation here, right? We have an engulfing bull right here, and so I want to see how far this pulls back, because the difference between just testing this and canceling this formation out obviously is a big one, right? Because there's a chance that this comes down even further, tests the backside of this broken counter trend line, right? So it comes down even further, but then we get big time price rejection, and then by the close of this candle, because we're still about an hour and a quarter away from the close of the candle, we get a different formation entirely, right? So I want to wait for the close. I want to wait to see how big this pullback actually is. But on the 15-minute time frame, okay, this actually does show some opportunity here, some really nice opportunity. Look at this. The market's broken into the sell zone, okay, came back for the test twice, so test and then retest, got rejected on both occasions. And now what we're looking at, let me just clean this up from yesterday. So now what we're looking at is a potential move back to the trend line. Okay. Now I don't quite have the cross out in the field that I would be looking for just yet, but I suspect I'll likely get that at the close of this candle. So it looks like it's going to be the close of this candle that I go off of. Now if I wanted to be a little bit more aggressive, it's a little bit riskier, but of course, that's what being more aggressive means, right? Then I would be looking at this engulfing bear right here, 105.98, and I'd look to drop this 10 pips for an entry. Right? So 105.98, I'd look to drop it down to 105.88 for an entry. And then I'd look to go 15 pips above the high, which in this case, let's just verify, yep, 106.07, so what is that, 22? 106.22. Okay, and then so 106.22 and 105.88. It's 34 pips in risk, which means should be looking for 51 in reward. So 105.37 is what this looks like here. 105.37, which happens to be right back to the trend line. Okay. So that's actually not a bad looking opportunity there, and now I do have the cross. So I'm actually going to go ahead and take this, so bear with me while I do. This is 34 pips in risk. Yeah, 34. So I'm going to go ahead and look to take this for myself here with a stop potentially at 106.22, potential take profit at 105.37, and I'm looking to get in at 105.88. Okay, and I'm instantly in just like that. It did allow me to put the pending, and then it took me in immediately without delay. And so let me go ahead and mark this off because I'm now in on this. Okay, I like this again, because of the pullback that I'm looking at here. This is a bit more of an aggressive entry that I've taken, but again, you don't gain if you don't risk, right? 106.22. There we go. So this is what my position looks like here. And again, if we go back up to the 2-hour time frame there, you can see I'm basically looking to just sell this back to the trend line, right? This is essentially exactly what I'm doing here, looking to sell this back to the trend line. Now that would mean that dollar CAD should, in theory, be doing something very, very similar. Okay, and so you can see here's dollar CAD. Here's the opportunity taken from yesterday. You can see how that worked out absolutely beautifully. Another lovely, lovely trade from yesterday. And so, you know, naturally, of course, we're now getting the pullback as well. Now, it looks like on the previous round here, right, this previous little cluster of candles, looks like the market attempted to create an evening star, but it wasn't quite successful, right? It wasn't quite successful. And instead what happened is, you know, indecisiveness led to what otherwise would have been an evening star breaking into two separate candles. And then that, you know, that the result being this huge engulfing bull that came back for the test here, you know, just goes to show that this is a failed evening star, excuse me. It's an attempt, but it's an unsuccessful attempt at an evening star. And so, you know, now that we have this candle here coming back and testing this engulfing bull almost entirely, it's erased almost all the gains the bulls had right here. What this is leaving behind, this is called dark cloud cover, okay? And so dark cloud cover obviously is a bearish indicator. The stochastic RSI in this case is completely overbought, okay, sitting at 83, arguably 84. So, you know, a selling opportunity, I would not be opposed to a selling opportunity if one presented itself here. And wouldn't you know, have a look at that, right on the 15-minute time frame. That is an evening star, okay? This what's just been left behind. So I'm going to go ahead and look to see what this looks like here. All right, there's the evening star right there. So the close, let's see here, the close was 26.96, so this is going to be 26.86. 26.86. Okay, which I like because it gives this a chance to break this little support level that we got here. I'll just point it out to you quickly here. Okay, little support level there. That's a bit of a nasty level. So if the market breaks it, that's a very good thing, and you can see my order is just beyond it. So basically counting on a break there to even take me in at all. That's why partly why I like using pending orders, right? All right, so again, the close here, 26.96, so I've placed it at 26.86. I'm actually going to go down one more, just to 85, 26.85. I just like operating in those levels better. And then because I'm taking the totality of this evening star into account here for this setup, I'm going to go off of the high of the formation, right? So the high here is 127.18. And so 127.33 is where I'm going to look to go on this. Okay, and then 27.33 and 26.85, that's 48 in risk. So 72 is what I should go for at a minimum. It's going to put me at 26.13. Okay, 26.13. Now, dollar CAD is going to give me a good opportunity to come in with some fibs and show you the fibs, because I've wiped this clean. So I'm going to go ahead and actually start the fibs from scratch. Very first thing I want to do is just come in and put some trend lines in place real quick. All right, so from the high, I'm going to grab it. Whoops. From the high, I'm going to grab it and then extend it, change color. All right, and then of course I need to adjust. So I just want to keep going until I find that lowest point, which is just there. And then, hey, there we go. I'm going to go ahead and grab the high just there, and you can see that beautiful, beautiful, lovely level of resistance, right? Just absolutely gorgeous level of resistance. And you can see how actually the market broke it, but then immediately got rejected and came back below it, right? So again, confirming the resistance that's here. I now want to come back up to the top here, and I'm going to go ahead and start spreading my fibs and measure these waves of this trend. Okay, so show you how simple this is from the high to the first meaningful swing low, right? Meaningful, meaning I want to cut out all the noise and just go for the meaningful swings. 78.6 down to the 127. Okay, so obviously, you know, with fibs, right, the principle here, just to quickly tell you as I go, for, you know, just in case anyone watching this, if, you know, watching live or watching later on, if you don't have any experience with fibs at all, just so you understand what I'm doing, you know, the market moves in waves, okay? And so our Fibonacci retracement tool is our method of measuring those waves. And basically, you know, the logic here is how far the market retraces, okay, determines how far the market will likely extend, because you have your retracements and extensions, right? Because if you picture waves, right, so, you know, instead of the market moving in straight lines from point A to B, it moves in waves, right? So we have point A, point B, point C, point D, right? And then the cycle just repeats itself over and over and over again. And so, you know, the logic behind Fibonacci analysis is the further we see the market pull back inside of that initial impulse, the further the market will likely extend beyond the initial impulse. Okay, so hopefully that makes sense for you. Obviously, I go into extensive detail inside of the Ultimate Forex Trading course, link in the description. But of course, that's just a high-level overview to help you understand what it is I'm actually doing. Okay, so moving on. We have a 61.8% retracement here, so I'm looking for an official low at 36.35 or better, right? So 36.35 or lower. So 36.35, and I'll put the last digit in there. 36. Let's try that again. 36356. Put the last digit to be totally accurate. Okay, and you can see there we go. There's the official low. Beyond it, just beyond it. All right, so. New fibs there, so now I have a 23.6, and so a 2.618 target all the way down here at 122.43. Okay, 122.436 to be exact. Okay, and this is the 2 hour anticipated 2.618. Okay, so, you know, obviously same thing goes like what I said before about the 2.618 and when we have less than a 38.2% retracement, there is a chance the market will try to come back into the AB boundary to find that deeper pullback, right? A minimum of the 38.2%. But as long as we remain, two things: as long as we remain below the B low of the boundary, which in this case is 35.45, and B, as long as we remain below this long-term downtrend line here, which of course is reinforced acting as resistance, we should be okay. Okay, we should be okay to continue going toward the 2.618 rather than trading toward the 38.2. Okay, so I want to come in here. I want to get a little bit more granular though, because obviously there's a lot of room here between where this formed and where we are at current market. So I want to go ahead and spread some sub fibs. And so what I want to do is it's this low that I'm after here. That's the first move there. We then get the reversal. So it looks, I need to see where that actually occurs, and it looks like it's this one. All right, so purpose there obviously is to eliminate noise and just go for the meaningful swings. Again, that's what I care about, right? Meaningful swings. So there's the first one, A to B. Market, oh, it does come back. It does give me a 38.2%. So this is what I was just referring to, right? Just quickly, another aside, right? This is exactly what I was referring to. We have a 23.6% retracement, which is this very first level right here, this purple level. The market then leaves the AB boundary, and as long as we're below that B low, we shouldn't be thinking about that 38.2% anymore, really. Even though we subconsciously, we have it always there in back of mind, knowing that's always a possibility. Then the minute the market comes back into the AB boundary, it's more than a possibility at that point, right? So this is the first indication. It came back, it penetrated through, and even though it got rejected, it's an indication that this was really going to try, okay? And try it did, and it actually was successful, and we actually had a full successful fib. There's a full-fledged swing trade just in here, right? A to B, roughly. Okay, C to D. There it is. Full-fledged swing trade just there alone, okay? And what that did was that resulted in a 38.2%. So that's the sub. We're going to go ahead and get rid of that. Obviously, the market is following the capital fib. This is the capital fib, all right? So it came back to the 38.2%. I should be looking for a fulfillment then at 12935 or better. Okay, so 12935, and I'll put the last digit in for accuracy. 129354 or better. The official low, and there it is right there. Okay, so this is my new A to B, just like so. I then get a 38.2% and I move down to the 1.618. So I want to see this 126.24. Let's go ahead and mark it. 126.24. Last digit 1. And I believe that's it right there. Let's double check. Ooh, very close. 247. Yeah, but that is a hit. That is a hit. So I'll call it. That came within 0.6 of a pip. But to be honest, less than 1 pip. If it's more than 1 pip difference, I don't call it. Less than 1 pip, I'm just gonna call it. Okay. I mean, let's not be silly, right? Let's not get carried away. Less than a pip is like, what is that? Right? So now, right, we have another 38.2%, and so I should be looking for this to come down to the 1.618 as far as these subs are concerned. And lo and behold, look at this. Where this target is, this, of course, because I've got a 38.2, almost a 50 here, the target here is down at the 1.618, which is 122.86. Okay. So this is 122.861. And so this is the 2-hour anticipated sub, 1.618. Okay, and so now what I'm looking for is, from this point here, I'm looking for selling opportunities in the direction of the trend and in the direction of the fibs. So these are my 2 fib targets. They're both to the downside. So I should be looking for, you guessed it, selling opportunities, right? And that's in line, of course, with the pullback on the dollar, across the dollar, that I've been anticipating all morning and that we are starting to see materialize, right? Okay, so that brings us back down to where we started, back down to current market. Hopefully that puts things into context here for what we're looking at. And so even though we've had this nice rally like this, I think it's coming to an end, or possibly coming to an end, and we'll start to see this sell off again. Now, alternatively, if this doesn't come to an end here, right, and if instead what it does is it continues to act off of this nasty little level of support right here, then what I'm anticipating at that point is that we'll just see this push back to the trend line for a test, and then that's when we'll get the resistance and see this start to fall right back in. Okay. Now on the 15-minute time frame, I want to see. So again, you know, this was the setup seen on the on the 2 hour, but on the 15, it makes sense as well because that's the evening star. So I'm going to go ahead and set this up. I do like the look of this. 27.33 and 26.85. So that was 48 pips in risk. Let me go ahead and look and see and set this up. Okay, so this is dollar CAD. And I'm looking at a potential stop at 27.33. A potential take profit at 26.13. And I'm looking to sell it with an entry sell stop at 126.85. Okay. So that's all set now. Right. Up next, Aussie dollar, US dollar. Now, obviously, you know, given that we're seeing a sell-off on the dollar, a pullback on the dollar, naturally, you know, any of the dollar secondary pairs, in other words, where the dollar is listed second. So, for example, Aussie dollar / US dollar, right? Dollars is listed second. Anywhere where we're seeing that, we should see a rally because the dollar is selling off. So if the dollar is weakening, it means whatever's trading against it is strengthening, right? So, having said that, this is another great opportunity for a fib demonstration. Okay, because I've cleared this off. Aussie dollar, US dollar, or as Rich and I like to say, Aussie dollar, dollar, has been in a nice uptrend. Okay, really nice uptrend ever since 55.05 over here. Okay, and so first thing, of course, is I want to come in with some trend lines. Let's see what that looks like with the trend lines, the hand-drawn trend lines, and then I'm gonna follow the same exact process. I'm gonna start, you know, come in and just start spreading some fibs. Okay, and see where it all leaves me. Okay, so that's the high right there. Is it? I believe so. We'll go with it, and then if I need to adjust it, I will. Okay. Make sure that's accurate and not penetrating. That's why I wanted to make sure of that. Okay, perfect. Perfect. Okay, so now just verifying this is in fact the highest high point, and it is, so that's good. Right, okay, I'm ready for my fibs now, right? So I'm going to go ahead and from the start of the trend, I'm going to look to start spreading fibs. Again, you know, I want to try to cut out as much noise as I possibly can. So, you know, any of these little tiny movements in here, I'm not really interested in. I really just want to see, you know, the sort of bigger swings. Not to the point where, you know, I'm skipping too much, right? I'm skipping over too much and missing important highs. But like, for example, you know, arguably you could actually go, in this case, from here directly to that first high, because that's you know, a high of consequence. We had a good sizable pullback after that. So in fact, that's exactly where I'm going to start. Okay, so A to B, like so, and then we get a 5-0. And so because I get a 5-0, I should be anticipating a move up to round about 0.62818. Okay, 62818. Okay, and that's exactly what I get. I get a high just beyond it. Okay, I then get a 23.6% pullback. And so, as you know, we left the AB boundary. I should be looking for this to continue all the way to the 2.618. So 74365 is that 2.618. let's see. Didn't quite make it just there. Came close, didn't quite make it. Came back to the trend line, right, to find support. Boom, found the support and finally made it. So here's my new fib. I'm gonna have to get it closer. There we go. Okay, and I keep the line there, of course, to help me see it. Is that a hit right there? The high is 74366. Yeah, that's a hit. That's a hit right there. It actually gave me the official high at exactly the price. Exactly the price, right? And so here we are up to current market. So this is the most recent AB boundary right here. Now, you can see we have what I call inside of the Ultimate Forex Trading course a super shallow one toe in the water retracement, which of course leaves open the possibility that the market comes back in for that deeper 38.2% retracement. But again, as I've said to you a couple of times already this morning, you know, once we leave that AB boundary and we're above the B, in this case, because it's an uptrend below, you know, before it was below the B, now we're in an uptrend, so above the B. As long as that's the case, I should be looking to continue buying, looking for buying opportunities up to the 2.618, which in this case is all the way at 9351. Now notice, you know, that doesn't mean I'm going to go ahead and just place a trade and leave it to 9351 and walk away, right? That's not my style. That's not what I'm doing here. I'm establishing the targets, I'm doing the analysis and establishing the targets, establishing direction, and then taking smaller trades in the direction of those targets, right? And just doing so repeatedly. Though you could technically, and there are traders who do, just place a trade and walk away. And I mean really walk away, like forget about the money and just leave it. But that's not what I teach, and that's not what I do. I don't have that luxury. My personality won't allow it. Anyway, I'm going to come in here with some subs then, right? Because I want to get a bit more granular and see what, if any, opportunity is there. So here we go. That's the first round. We get a nice pullback here back to the 61.8%. So, of course, I'm looking at 7678 for a target. That's exactly what we get. We actually get it better than that. Okay, super shallow again, 23.6, super shallow one toe in the water. Then the market comes back, gives me a 5-0 in this case, okay, and so I'm actually looking at a target up here at 7861. 7861. Okay, like so. And when I come in and put this trend line in here, this is actually beautiful because it shows a very good level of support. So the obvious conclusion here, of course, is I'm now looking for buying opportunities. The question is, will I have any buying opportunities? And I'm looking for buying opportunities to 7861. I'm obviously looking beyond that as well, but for now I'm looking to 7861. Okay, and so I want to turn down to the 15-minute time frame, and when I do, oh boy, is there opportunity. Look at that. There's a hammer that was left behind right at support. The market came right down to the automated trend line here, tested it, and upon testing it, left behind a hammer, and the market has reacted off of that hammer ever since, right? So let me see what that looks like. 7757 would have been the entry off of that hammer. 10 pips below over here, so 7729 would be the stop. Okay. 28 in risk, so 42 in reward. That's 7799, which is just here. I obviously like this very much, right? This looks really good to me. The only problem here is I'm 10 pips off of entry, so I've kind of missed the boat, right? Or the train, whatever metaphor we're using this morning. It's left the station. Whatever vehicle, whatever mode of transport we're using is left the station. So what I could do is put a limit order here at my ideal entry. What I'm going to do instead is put an alert on the line, right? So crossing, and we'll just let it notify me. So, train's left the station. Now, having said that, let me just go back a second, because I say the train's left the station, but let me just clarify what I mean. Because that doesn't mean that there's no that I'm not taking anything. It just means that, I can't take anything right now. What I can do, however, is I can wait for the close of this candle. I've got about 46 minutes to go. Just under 47 minutes to go. I can wait for the close of this candle, and then at the close of this candle, look to trade off the 2-hour time frame, right? And so that's what I'm going to look to do rather than just jumping in right now, okay? Unless, of course, the 15-minute gives me something a little bit better to work with here, i.e. it comes back and gives me an opportunity to get in again. But short of that, like I say, I'm going to wait for the 2-hour. Okay, up next, Kiwi dollar, US dollar, also in an uptrend. Kiwi dollar, US dollar, and Aussie dollar tend to move very, very similarly to one another, right? And so, unsurprisingly, of course, this is an uptrend as well, right? So I'm going to go ahead and repeat the process, starting with the low. And we're going to find where this leaves us. Just want to zoom out. There we go. So that's the high. So I want to connect all of the lows that come before that high. Right? And there we go. And let me get in a bit closer here. Check for accuracy. It's actually spot on, so never mind. Let's have a look. This is the high point, so there's obviously a trend line in there. I don't really need to draw it. It's kind of pointless because I already, I can see it. But this is the trend line right here. I will just roughly draw it quickly so you can see it. That's the trend line I'm looking at right there. Obviously the break, market moves toward the next. All typical good stuff, right? Now on this 2-hour time frame, the stochastic is completely oversold, sitting at 15, which is really nice. And we've got good support. We're at a very good level of support. You can see that. All this price rejection here makes this a very good level of support. So we're getting the candlestick formation at a really nice level. Do I have anything on the 15? Not likely. I didn't think it would be likely because of what we saw on Aussie dollar. Okay. And so again, it's kind of the same plan of action here between Aussie dollar and Kiwi dollar. Now, I do want to come in with my fib, so let's go ahead and do that now. Starting from the low, of course, low of the trend. So the first high of consequence, which is just here. Then I've got a 69.4%. So looking for 6112, a high at or beyond 6112. And I get it right here. 6130 actually. Okay, then I get a 38.2 and a 1.618, like so. Then I get a 23.6. And so I've got room here to 7396. That's my target. 7396. Last digit 1 to be totally precise. Okay, and I'm just going to label this, of course. This is my 2 hour anticipated 2.618 target. Okay, now of course I can come in with some subs as well, so let me do that now. Let's grab the subs from the lowest point to that high there. %, leading to a 5.0 actually, resulting of course in a 1.618. 6735 is what I'm looking at there. 6735. Okay, I then get an 86% pullback, so I'm looking for 6789 or better, and I get it just there. Okay. Come on, baby. Come on. There we go. We got there in the end. Right. So that's a new fib. I then get a super shallow 23.6. Ooh, and interestingly, look at that. So there's the fulfillment of that sub 2.618. All right. So 72716. Okay, so it's going to be just there. And then, as you can see, I've got a 38.2. Okay, so again, everything pointing up. Everything. Now, I've got about 40 minutes to go for the close of this candle. And again, just like I said with, you know, Aussie dollar, dollar. I'm going to wait for the close, right? I'm just going to have to wait for the close of the candle. And then look to go ahead and get in. Okay, waiting for the close of the candle will also give me further confirmation, by the way, because I'm still technically in the sell zone, technically, right? So I just need to wait. Okay, so let's go ahead and take a look now at pound dollar, back at pound dollar again. Let's see what's happening here. And I actually just want to zoom out for a second, because that, I think we just covered everything actually in terms of the majors. Yeah, and I believe we have. Okay, so let me go ahead and pull up pound dollar. Okay, so again, you know, like I was saying at the top, pound dollar broke this trend line. It did actually break it, so I need to update this to reflect that. So it did actually break it, but it's not managed to stay below it. In fact, it never once closed below it since it broke. Look, it broke and then immediately came back and closed above it. And the very next candle opened above it, stayed above it, closed above it. You know, same thing. Same thing with this one, same thing with this one. Same thing with the current one. So, you know, to think that this is anything but a good, strong level of support, like I said, is a little silly, right? We got to look at this as support, and strong support of that. A good level, good solid level of support. Okay. Now, again, you know, here in this case, I need to wait for the close of the candle. So I've got about 38 minutes to go. I need to wait for the close of the candle. I need that additional confirmation there. And actually, I've just realized I don't have anything on here. So hang on, bear with me. Oops. Hang on. Okay. You can see stochastic RSI on this, right? Completely oversold. We're sitting at 11.7. So I am very much anticipating a buy here. I think it's just a matter of time. Again, though, I need to wait for the close of the candle. On the 15-minute time frame, you can see there's even further justification for waiting for the close of the candle, right? Because even though we've broken this counter trend line, which is one of the things I was pointing to as, you know, and waiting on, we're now coming back and testing that. Okay, so, you know, just need to wait. That's all. Just got to wait for the close of the candle here. And actually, interestingly, just to show you quickly here, on the 4-hour time frame pound dollar, we've actually got a piercing line right at the trend line with a test, major test. So obviously the close of this candle at the top of the hour here coming up will also be the close of the 4-hour time frame, and we're getting a candlestick formation on the 4-hour time frame as well. So further indication of a buy. Further indication of a buy. Okay, and then once again on euro US dollar, you know, again, I've got these subs here that I'm looking at, but the stochastic is pointing at a push bullish here. In fact, I suspect we may potentially get a morning star left behind right here, because don't forget, you know, euro dollar, I'm also in an uptrend on euro dollar, right? Now we did break this trend line, so as long as we're below it, I have to anticipate that there is room for the market to continue selling to the next available trend line. But being that we've you know, just recently broken this, I'm anticipating a further test. Like, you know, we've already got a test going on here. I'm anticipating a further test for this to come back further and actually test the backside. And in the process of doing that, that may actually break us back above. And again, like say, you know, that may leave behind a morning star. So moral of the story here, folks, is, you know, I just have to wait, right? There's nothing I can really do here. I've just got to wait. Okay. So just to recap, I'm active on dollar yen already, which I took off of the 15-minute time frame, right? So we're coming back, you know, we tested the backside of this now broken trend line here. I'm getting a little bit of support. It's no big deal though. I'm not worried about it. What I do need to do here though, okay, in terms of managing this and knowing when I should be staying in this and when I should be looking to get out of this, right? This candle right here, this engulfing bull, the high is 106.07 and the low is 105.86. So that's 21 pips. So if I chop that right in half, let's just call it 10 pips. So from the high there, which is about right for dollar yen, by the way. Dollar yen only really moves in 10 pip increments like that, largely. Okay, so the high is 106.07. It's going to be 105.97. So what I'm doing here, okay, is I want to make sure that the market stays below this level, 105.97. Okay. I want to make sure the market stays below 105.97. If we come back above 105.97 and close above it, then this is, forget about this at that point, right? Because what that'll actually look like is that'll be a hammer that's being left behind, right? At a minimum, it'll be a doji, and this will be the actual candlestick we're operating off of. So we'll know a lot more in about half an hour's time. But again, 105.97 is kind of what I'm keeping my eye on as to the viability of this trade. Okay, and then outside of that, that's my only active position at the moment. Outside of that, I do have a pending dollar CAD sell, and you can see it's just here, but that is pending. I'm close. I'm within 10 pips of entry here, but it is still pending. And then again, the game plan, I told you the game plan with regard to Aussie dollar and with Kiwi dollar, it's the same on both. I really do need to wait the 30 minutes for the close of this candle before making a decision either way. Okay. With that being said, folks, we're going to have a shortened version today, but that is all our majors covered, so hopefully that's been helpful for you. Hopefully you've enjoyed it. We're going to go ahead and end it here. For those of you who have been with me this morning, thank you for joining me. For those of you watching along after the fact, thanks for watching. If you like what you saw in the video, obviously, we would really very much appreciate it if you gave us a thumbs up. And if you want more content like this, more trading stuff, go ahead and hit the subscribe button and join the family, join the Kickstart Trading family. Okay. With that being said, folks, we will be together again tomorrow morning, and hopefully Rich will be with us then. But if not, either way, I'll be here. And then we're gonna have an announcement about a change that we're making to the Forex Trading Lounge tomorrow as well. So do tune in for that. Right, everybody. With that being said, until next time, you know the drill. Have a wonderful, wonderful day, everybody. To your health, to your wealth, and to your happiness always. Christopher Guzman signing out and saying good day. Take care, my friends. Bye-bye.